Hi, I'm Tim Gardner with Gardner Financial Planning, and this is Google's Top 10 Questions on Retirement. How does retirement work? Retirement is a life stage, not an event. It's a period of life where you've earned the right to do what you want, not what you must. Two big changes in retirement. One is your source of income changes from work to your own savings, and two, you're going to have at least 40 hours more time available to yourself. Why is retirement planning important? Think of retirement as being on vacation for 30 years. All of us have dreams for what we want to do when we retire, and a plan captures those dreams, gives us a price tag and a date that we're going to do them. That tells us how we should save, where we should save it, and how we should invest. How much money do I need to retire? Begin by estimating how much you'll spend and when you're going to spend it. That's really the only way to know how much you're going to need. When can I retire? That's simple, when you've earned the right to retire. And that means having saved enough so that you can afford all of the things that you want to do at that time. What retirement income is taxable? The general rule to think is that most income is only taxed once. So taxes in retirement happen when money has not previously been taxed. So think about 401ks and IRAs where you didn't pay tax on the money you contributed. When you take it out, you will pay tax on that. The taxable accounts are pay tax as you go, and so there probably wouldn't be taxed on the withdrawal, but you would have taxes paid while you have the account open. And Roths are the exception. You pay tax on the money when you put it in, so that's after tax, but the growth in the account can come out tax-free. Is gifting money in retirement taxable? Gifts are a transfer of assets. It doesn't matter when you gift them. In general, they are taxable. However, it's unlikely that you would ever pay tax on gifts. How do retirement plans work? All retirement accounts are arrangements with the government that incentivize you to save for your own retirement. And that is, you get a deduction when you put them in, the gains in the account are tax deferred, and you pay tax on the account when you take it out. The exception is a Roth, where you pay tax on the money when you put it in, gains grow tax deferred, and when you take them out, the gains come out tax free. It's important to remember that contracts with the government for your retirement are not investments in themselves. You open the account, create the arrangement for taxes, and then you invest. Are investment properties a good retirement vehicle? Real estate is a hard asset, and by that we mean that you have to do some work if you have it, versus a financial asset that is basically an account and you don't have to do anything with that other than manage it. So the question is, do you want to do the work to have real estate? Can I keep working when I retire, or are there limits? You can work as long as you want. There's no specific age requirement to be able to work. However, if you work, especially in the early years of retirement, you need to be careful with Social Security. Should I wait to begin collecting Social Security? That depends on your personal situation. The bottom line question is, do you need the money? Thanks for watching our Top 10 Questions from Google on Retirement.